All right,
The week.
so not trying to brag. I'm not trying to humble brag either, but I do just want to say we called it.
Oh yeah.
We totally called it. Uh, so now I got two reports here. Both of them from Yahoo Finance. How major U.S. stock indexes fared Monday, March 2nd, 2026. Oil prices leaped on worries that the war with Iran could clog the flow of crude, while U.S. stocks swung from sharp blows to small gains. The S&P fell 500 as much as the S&P 500 fell as much as 1.2% Monday, and cruise lines and airlines led the way lower on worries that on higher fuel bills. But the U.S. stocks quickly erased those losses, in part because past military conflicts haven't usually created sustained drops for the market. The index finished with a gain of less than 0.1%. We called it. We called that on Sunday that they're already having like pre-crash like kind of sentiments where people are trying to sell before the market's even opened, and then
Crazy.
yeah, crazy. And then we predicted that people would see like, oh, a sale, and they would pick it up, and which would drive demand up. And granted, it's a gain of 0.1%, but if you're investing like hundreds of thousands of dollars, that's
Mm.
a $1,000. Like if you didn't do anything, you didn't trade any stock Monday. You went, you clocked into work, clocked out of work, had $100,000 into S&P 500 or whatever. You made $1,000 doing nothing. Now, if
Mm-hmm.
you picked up some stocks when it fell to 1.2%, you made a few grand. Actually, you might have made 10 grand or something like that. Oh, I'm thinking millions. Whatever. Anyways, but that was Monday. I just want to give us a little pat on our own backs because we called it.
Also, guys, never forget. Always, always, always buy at the threat of nuclear conflict. Because especially if there's a dip due to threat of nuclear conflict. Because think of the risk reward square. All right, top left, you've got you don't buy and there's no bombs. You lose out on the opportunity. You don't buy and there are bombs. You're dead. You buy and there are no bombs. You make it big. You buy and there are bombs. You're
You
dead.
did.
So there is no downside to buying
During
when there's a
nuclear
threat of
wars.
nuclear war.
There's not financial advice. Do your research. But that is
This
some
is not
great
financial
research.
advice, dear. This is financial.
This is also not survival advice. But
This is also not survival advice.
but I do have an article from I think it's today. Oh yeah, March 5th. U.S. I'm gonna read the title. Stock market today: Dow and S&P 500, Nasdaq futures climb with key jobs report set to cap volatile week. The U.S. futures rose Thursday evening after another volatile session on Wall Street as investors continue to react to an expanding conflict between the U.S. and Israel, the U.S.-Israel coalition and Iran ahead of the Friday's key jobs report. I sound so like a redneck every time I say Iran. It just dawns on me every time.
Iran.
Iran. Every time I say it, it dawns on me. Futures linked to the Dow Jones Industrial Average rose 0.3%, while the S&P 500 and Nasdaq 100 both inched up 0.2%. During Thursday's regular session, the S&P 500, Nasdaq Composite, and Dow all closed in the red. The S&P 500 is on track for a weekly decline, while the Dow has fallen over 2% and breached negative territory for 2026. The Nasdaq has bucked the trend, heading for a small weekly gain. Energy markets were again a major focus for traders. Oil prices surged Thursday, with West Texas Intermediate and Brent crude futures both touching their highest level since 2024. The gains see crude on track for its largest weekly percentage gain since March 2020. Investors are now turning domestic attention to the February employment report due Friday. Economists surveyed by Bloomberg expect the report to show job growth of about 55,000, down from January's gain of 130,000. The U.S. unemployment rate is projected to remain unchanged at 4.3%. Meanwhile, President Trump's tariffs have returned to the headlines following the news that the federal judge has ruled that his administration has begun the process of refunding up to $130 billion in tariffs that were struck down by the Supreme Court. More than two dozen states and 22,000 companies, including Costco and FedEx, have joined a court case against the government. Quote, I guess it has to get litigated for the next 2 years, unquote, Trump said of the case. We can get to those later or a different day. We're mainly here to talk, at least this segment's more about the market. So, we called it. There was going to be a dip the moment the market's open because people are panicking. People see that dip, they buy. Markets go up, and it's kind of it's volatile, but we're only going up and down like points of percents. Still, if you're investing a lot, you're probably not watching his channel, and B, like it equates to not much. If you only got like $1,000 or even $10,000 inside of the the S&P 500, and it's one, it says here it's up, so you gain $20 or something like that. Actually, no, you have $1,000 in the S&P 500, you gain $2. So congrats, a penny saved, a penny earned. But I think so. Usually, while the market and its prices, like, they're supposed to act as like messengers, especially from the stock market. It's supposed to tell you like, oh, people don't view this company as good. People view this company as good, so it's worth more. We don't think because of certain current events, the companies will last, and so on and so forth. It's a projection of what people value in the market. I do think that again, I feel like under normal circumstances, something like this where 20% of the world's like energy is essentially cut off, that would spell doom. But I think this is kind of a result of like oversaturation with investors. Like, there's so many investors nowadays compared to like, I don't know, the 80s at least, that even when there's like downturns in the market, people have a habit of picking up the sale. And also, I think another thing is like the S&P 500. That's 500 companies. Now, granted, most of those are technology companies, but it's the same concept. You have a lot of eggs in one basket. If a couple of them go bad, you still have 498 eggs in one basket. So, same thing with at least in my opinion, same thing with the market. Yeah, you had a bunch of people selling, but you also had a bunch of people picking it up because, again, I don't speak for day traders. I don't speak for investment companies, but at least from what I've seen on the internet, a lot of people aren't trying to day trade or learn to day trade. A lot of people have been using the stock market as like a not like a substitute for their retirement, but like an extra. You know what I mean?
Mm-hmm.
At least from my experience. So whenever they see at least especially those people who are like, we're in this for the long haul, they don't care if the market goes down. The market has never crashed so hard and never beaten its high. You know what I mean?
Yeah.
You can go since like the 1700s, following stocks and stocks. At least the companies have survived for sure. It's always gone up. It's never crashed and never recovered. Specific stocks, yes, absolutely, they crash. But I think when you have things like the S&P 500, where it just takes the top 500 stocks, like the bottom ones will always get switched out, but you have such a good backup plan, more or less. You know what I mean? Like, these stocks are kind of leaning on each other. That, yeah, it's a crash. Worst case scenario, you don't do anything. Wait 10 years, it goes up. So, I think that's one reason why it's, again, 20% of the world's energy is cut. Well, cut from us. I think, I feel like they still have it. So that's one thing. And like,
Yeah.
Yeah, and it's so much easier nowadays to get into investing. You know what I mean? Like, I've got like 3 apps on my phone for like different ways I want to invest, and it's kind of almost shockingly easy. Like, I'm not saying it's a direct correlation or causation, but like, I have a note here that says aggressive buying and the introduction of new and poorly understood financial instruments often precede a crash. Now, what that's saying, it comes from this is from 1929, Frederick Lewis Allen, and he says, "quote The striking thing about the stock market speculation in 1929 was not the massiveness of the precipitation, rather it was the way it becomes central to the culture." Unquote. So 1929 was big stock market crash, obviously, and if I'm not mistaken, that was like part of that led to like the Great Depression, didn't it? Give me 1 second. Yeah, 1929. So, and I have to remember from the book, but it was like like everyone was investing into it. You know what I mean? Because for like from like the 1890s all the way up to the 1920s, you would see these people just get rich from investing in stocks. So then the rest of the country was like, here, we'll buy some stocks because it seems like a good investment for everybody else. And they brought up one scenario where like a 9-year-old girl sent money to a broker. She sent like 25 cents to a broker to like be like, here, invest in a stock.
Hmm.
Again, it was a 9-year-old girl. Now I don't know if that story's true, but they bring it up in the book, and you know what I mean. So when I say oversaturation of the market is hiding, like I mean what I mean is like it's hiding the fact that 20% of the world's energy got cut. There's no way like the real value of these things aren't getting reflected. You know what I mean?
Hmm.
Everyone's investing into stocks. It's kind of a trend, especially since 2020 with the crypto and the finance bros. They got a huge
Hmm.
bump at 2020. Well, that was also because like I think Bitcoin reached like $60,000 per coin or something like that. I would know because that's when I
Yeah.
got interested. Because I didn't understand it. I was like, I don't understand why this digital thing, is worth so much. Then I got into it and led me to this rabbit hole. And anything you want to add?
Um, Honestly, I think a lot of this we're still going to see the effects play out. I think a bunch of this is like sure we have predictive markets where you'll see like you know Monday $16 trillion wiped out from the S&P 500, and then like no one's life really changes because
Yeah.
those are like predictive markets.
Mm-hmm.
Or a lot of the valuations on that stuff, a lot of the air quotes money that exists there exists solely as like we think this company is worth this much, but that's not necessarily an effective assessment of like how people specifically are affected. With the closing of the what is it? It's a canal, right, in Iran, where like a fifth of the world's oil flows through.
Yeah. Mm-hmm.
Um, like that, we probably won't feel the direct effects of probably until this summer, when we'll see like gas prices and what. We might see it sooner, but I think probably in a couple of months, um, we'll really start to see this stuff hit the market because it has to make it through refinement and has to make it through all this other stuff before you really start to feel that effects. If you're someone who plays games like Factorio or Satisfactory, you are aware of like sometimes systems can keep running at suboptimal levels and you don't feel that you're out of, let's say like sulfur or it could even be oil until like hey, the supply isn't high enough, but then you don't notice for like hours and hours and hours, and you're building all this other stuff, and you're building, and your life's moving on, and then suddenly, well, hey, I don't have enough steel plates. Where am I not making steel plates? Wait, why don't I have enough to run this? Wait, why don't I have? And you have to go back through the line. So that example being basically it takes it a while. If we're the very end like product consumers, it's going to take it a little bit for it to sort of like hit our walls. I'm sure companies are going to jump at the notoriety and be like, oh, we have to raise gas prices because of this that just happened. It just happened now, so we have to raise our prices right now, right now. So they'll do a little bump now, and then they'll do the big bump later, so they can squeeze as much out of it as they can. But I think from like a personal life standpoint, I think we're still yet to see sort of the big effects of this. And who knows, maybe it'll get reopened in like 2 weeks and it won't change any. And like, we'll feel like a little bit of a bump, but then the real effects on like your average gas price isn't going to be a huge or effect or whatever because we have reserves for these exact moments. Um, but yeah,
Yeah.
that's those are
Mhm.
my thoughts. I think like, and also to your point of like market saturation, there's I think with so many people being in the stock market that weren't previously, right? Like being into like having investments um, was something that was either handled for you via like a pension or you got stock in a company because you were high up enough in it. But like everyone doing sort of these like penny stock investing style, right? Everyone's sort of like a Wall Street broker through
Mhm.
like Robinhood and stocks or Stockify and Stockpile and whatever investment app you might have. I think there's something to be said for like there's a lot more money. The market is kind of weirdly more volatile now than it was in the past. Like it's almost artificially volatile because people who don't have a lot of experience with the market, who just got into this type of thing, they're pretty sensitive, right? They like to hop on stuff that goes up and they like to get out of stuff that goes down. Um, like not everyone who's doing this is some like ultra savvy, investor type. So I think a whole bunch of the stuff that we see right now where it's like $17 billion wiped out of the stock of this company, it's like, what's 17 billion across, let's say an investing market of like sure, you're right. There's probably big companies involved here, but I think as like a market force, I think there's like an artificial level of volatility to some of this stuff because of the small individual investors that are investing probably unsafe amounts of their own personal money um,
Mhm.
into stuff like this. So that's where we might be seeing some of the volatility. Again, I don't know the actual technicals about how much money they constitute. Like, I don't think they're going to be able to dwarf like your Berkshire Hathaways and stuff. But there's probably still some like artificial volatility is all I'm trying to say. I think some of the shock that we're feeling now is artificial volatility more so than it is like these big companies really truly like hedging their bets against it. It might be. I'm sure there are some that are, but I just like as a general thing. That's how I feel.
Yeah, I got you. I got you. I mean, my point with the like the what's it called, like I said with like the, a bunch of people like getting into investing now, because I think like I read somewhere it's like just normal people, not banks, not investment, not firms or whatever. Like we've raised to like 30% of the stock market is by people who are not part of, they didn't go through they're not from a company, they're not investment banks. They're like almost 30% of people. I could be wrong. Check on that. But my thing is like, so how can I put this? With 30% of people, not granted, I'm sure some of them sold, and I'm sure there's some who are like, I don't care, I'm just gonna wait it out and then keep throwing money in even during bad times. My thing is like, I think it's kind of putting a blanket over the real situation. You know what I mean? I agree with you. The canal can be open in 2 weeks and we'll struggle for like a hot second. You know what I mean? I get that. My thing is like, if it doesn't, because now companies have to hedge on it. Okay, hedge on, or is it going to open in 2 weeks or not open in 2 weeks? But because there's so many, like 30%, again, we're just throwing this out there, 30% of people are investing, they don't care, they don't understand that these stocks are going to go down for a bit. You know what I mean? Like it's almost like
Hmm.
the wool, or like not the wool, like the rose tinted glasses. Once you take them off, then the crash will happen. You know what I mean? I think that's what happened during the 1929 crash. And my reason for that is like, you sent me a TikTok and it said something like Morgan Stanley is laying off 2,500 people across major divisions, including investment banking and wealth management. That could I read it. It's like they're they're restructuring their company. That's why we have a bunch of people being laid off. We have now granted that could also be because of AI. Absolutely, that they're like, we trust whatever system we're looking at right now. But even in this what's it called? In this Yahoo Finance article, uh, they're expecting an even slower job growth, and even lower. Now, granted, it's still going to be up 50 projected. It's going to be up 55,000, but that's down from, you know what I mean. So that's my worry, is
Mm-hmm.
that it's pretending, like you said, with that, with the one game you're talking about. The system's running suboptimally. It just hasn't realized it yet. Does that
Yeah.
make sense? That's kind of where I'm getting at, where it's like, yeah, we called it that the market was going to go down, that people were going to pick it up, or it was just going to go back up in general. My worry is that, like, the prices you see on, like, Robinhood or Webull, it's supposed to be reflective of what the company is. It's supposed to be, but it's supposed to be what the company's valued, but it's what the people value it as. And if the people don't fully understand the situation, it's
Mm-hmm.
overvalued. You know what I mean? That's that's just where I'm kind of worried at. Um, oh yeah, right here. Actually, give me 1 second. Let me read that real quick. So this is from AOL regarding the Morgan Stanley cuts. Reasons behind the cuts: while Morgan Stanley reported strong financial performance in 2025, the job cuts are part of a broader effort to streamline operations and adapt to changing market conditions. Again, that could be like, we trust AI more than we trust these people here. You know what I mean? So that's, you know what I
Yeah.
mean?
Yeah.
Ooh. But that does lead me into, like, when it comes to, like, things being valued.